My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to save you some money. My job is not just to entertain, but to educate and teach about days like today. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Sometimes, look, the whole stock market, every stock gets pulverized. Days like today. Dow plunged 981 points, S&P plummeted 2.77%. NASDAQ nosedived 2.55%. Interesting that it was not as bad as the S&P. We've had a few of these really ugly markets in the last 22 years, and they're classic shakeouts. That's what I call them, where you need to ask yourself if you can afford to take the pain or if you need to step aside. Now, see, in my experience, the only time it makes sense to step aside is when there's systemic risk, like 2008. Other than that, every time it made sense to raise some cash on any bounce and then pounce on stocks and weakness. Ironically, if you got out when I said you should dodge about a 4,000-point decline from Dow 11,000, it made so much sense. And yet people were furious at me when the market came back, even as I told you to come back with it. Selling it all has been a real bad idea, even when it's been a good idea. Right now, we don't have that kind of systemic risk. The whole economy is in danger. The risk here is simply that the Fed doesn't do enough to quickly kill inflation, which everybody wants in the business world. The longer Jay Powell waits before slamming the brakes on, the more days we'll have like today. He needs to move swiftly because these earnings reports are coming in way too hot, with tons of companies not being able to pass on price increases to customers, others raising their prices like crazy, causing a ton of inflation, and many others that I think are just way too optimistic because that cheap money's going to stay forever. So they're doing things they shouldn't do. That's why, as we go to the game plan for next week, I want to highlight which companies are best set up for this moment, which ones could be in danger. My feeling is that after today's disaster, we're actually probably good for another beatdown or two before we settle into what I think will be a feeble midweek rebound, but deserving given how oversold we will be. Monday starts with the classic recession-resistant stock that I think you got to keep on your radar screen if we open down badly Monday, and that's Coca-Cola. I'd be a buyer on weakness because Coke has tremendous pricing power. I'd say the same for PepsiCo on Tuesday, except we have to see what they say about the substantial Russian operations. But once they bite the bullet, I think you got a great buy. General Electric's getting one step closer to its breakup. So I'm only focused on how well its power division is holding up because that's the swing factor. That's the weakest of the three. Are they getting the orders from Russian-inspired energy crises? I hope so. All right, now, how about one of my old favorites, 3M, and its seemingly endless litigation moves? I hope they give us a rundown on the allegedly defective military earplug lawsuit and the groundwater issues so we don't get blindsided by those two incredibly important items that are dragging down the whole company. I expect the numbers to be pretty good otherwise, but don't jump until you read about both. Tuesday night is when it gets crazy. We have Microsoft, which should have terrific numbers from Windows 11 and Azure. It's cloud business. But it might not matter because the stock is expensive. Then we've got Alphabet, which people have turned on now because they think online advertising has stopped growing. I think they're wrong because Google's a special case. It's the share taker. Now, we get results from one of my favorite chains, Chipotle. I love it. But I'll warn you that this kind of high-flying growth stock can only be a trade in a rising interest rate environment. Plus, they might talk about the need to raise prices to offset rising labor and food costs. I mean, have you seen the price of avocados recently? Remember, traders will seize on anything negative right now because of the mindset of the market. So Chipotle might be worth buying on weakness as long as the Fed decides to kill inflation now. Probably not next week, but you never know when the Fed's going to wake up. Wednesday, we have T-Mobile in the morning. After Verizon's lackluster growth number this morning, it was really not a good quarter at all. And AT&T's kind of decent showing the other day. I'm looking for T-Mobile to have its usual strong results. But again, it's a high multiple stock, so it probably won't matter. Drops at the open, then maybe you pick some up. Boeing reports, too. Now, we've all gotten used to Boeing being ugly, and I expect more ugly. The thing is, it should be the ultimate reopening trade, as all the airlines are short on planes. They need Boeing. Boeing needs help from the FAA on the Dreamliner. Now, you could argue they're being unfairly punished at this point, but given the recent track record, I get where the regulators are coming from. After the close, we hear from Meta Platforms, the artist formerly known as Facebook, which will say that, what can they do? The stock's been cut in half. Now, I think that they'll miss the forecast. I think that they'll cut both the forecast, miss the quarter, cut the forecast, but then they got to buy it. and I'm keeping some powder dry to do some buying for the charitable trust. If you subscribe, you'll get the call before we do anything. Like many of these names I've mentioned, I'll have extensive commentary on Facebook's quarter for the Investing Club. Now, we've also been doing these things at 1020 for members only. We're going to spend a lot of time on Facebook because I think it might be a great opportunity. Now, Thursday morning, one that I've not talked about lately, Caterpillar reports. These guys should be picking up some large infrastructure orders, and I hope some new oil and gas business. Hey, maybe even some coal orders. The Russian invasion of Ukraine has forced Germany to rethink its use of coal. I don't blame them. They replaced their coal plants with natural gas to get that natural gas from Russia. And they're effectively financing Putin's war effort. CSX said coal orders are coming back. Who knows? Between that and the elevated price of gold, which uses a lot of CAT equipment, then maybe they had a good quarter. When times get tough, the company that usually shines is McDonald's. This time, though, it has some Russian exposure. Let's see what happens. If the stock comes down, then you should be buying this stock into a Fed-mandated slowdown. It's always been a great place to be. Oh, and then there's a little matter of Twitter. Have they been able to monetize direct ads or branding? Do they have new blocking actions, maybe keying on words you hate? Or is it just the same old, hey, we'll get it right? Because if there's nothing groundbreaking, I got to tell you, I think Elon Musk should lower his takeover bid. Make it what we call an exploding offer. He should go full corporate raider here and go after Twitter by any means necessary. Thursday night is brutal for me because we hear from both Amazon and Apple. It's like Andy Jassy and Tim Cook are conspiring to make my life miserable because, of course, as my wife says, it's all about me. Now, it's entirely possible by this point the market will be so oversold that these numbers could work. I think Amazon's meeting no resistance for any other retailer, but it's still a high multiple stock, which means it might not be able to put up much of a rally, even if the quarter's spectacular. The market hates high multiple stocks, and it hates companies that don't make money. Sadly, Apple's now a high multiple stock, too, because Wall Street finally stopped treating it like a hardware company. The hope here is that they break out the average lifetime value, LTV, of their service customers, because I think the number would be very impressive. Remember, people don't switch from Apple. They've got tremendous brand loyalty. But, think about it. We got this lockdown in China. We got a panic in Europe. So it's hard to imagine any upside from cell phones, especially when you keep hearing stories of inventory overhangs, like we heard the other day from Lam Research, the big semiconductor capital equipment company. Friday's all about oil. And I like oil. Here we're going to be talking about Exxon and Chevron. Exxon's now among the cheapest because it's no longer a consistent operator. As for Chevron, we own it big for the Charitable Trust because we like oil and gas, and we're up very nicely. I expect good things, although some people are concerned about a pipeline they have that goes through Russia. Personally, I would love to see Chevron stock pull back so we can buy more with an even higher dividend yield. Bottom line, once again, I want to advise you that you need to take a little off the table into any of the bounces to prep you for the coming rate hikes. You can put a little money to work on days like today, as we did at the Charitable Trust, but only if you have the money to begin with. Without some extra cash, days like today, pure torture. Let's go to Clarence in Connecticut, please. Clarence.
Chill, man.
It's Jimmy
As
Chill.
an Investing Club member, I just want to let people know what a great value it is. Thank you.
Thank you. We're just putting out some. We did a really good thing after the close today. We did some, Jeff Marks and I did questions and answers about the sell-off. I think you'll really enjoy it. Thank you.
Oh, you bet. All right. Now, my company, it doesn't pay a dividend, but it meets many of your other requirements. It has a low PE, right around 11, I think, a $1 billion share buyback program, and it makes a ton of money. It's been down big the last couple of days, so would United Rentals, URI, be a buy before next week's earnings?
Okay, URI sells it at 20 times earnings, but 11 times this year's. People think that the numbers are going to be down next year. Here's the problem with URI, and I know I don't want to sound too negative, but their business is based on buying companies. And right now, no one's going to want their stock. So I think that stock has to go lower than the $23 that went down today. Let's go to Andy in Florida. Andy.
Jim, longtime listener. Thanks for all you do.
Oh, thank you. I want you to join that club like our previous caller. What's up?
Okay, so a couple of weeks ago, you recommended Dick's Sporting Goods. I did my research on it. It's got a PE below 8. It's got good cash flow. It's 5 times cash flow. It's paying 1.8% dividend, but there's a huge short position against it. So is that something that we should be concerned about when we see a good stock that all the fundamentals?
If the balance sheet were bad and management were bad, I would say yes. I think this is a stock. I'm not ever encouraging a short squeeze. That's not how we make money on Mad Money. But I'm telling you that if they've done the work on this that I have, and they still reach that conclusion they should be short, I think that they should be after a different kind of company. This is not the kind of company I would lay out on a big short. It's too smart. It's too well run. Let's go to Rhett in Kentucky, please. Rhett.
Hi, Jim. Long-time listener, first-time caller.
Oh, thank you.
First of all, thank you for teaching me through the years. It has allowed our family to have a lot of freedoms we otherwise wouldn't have.
And that's what we want. It's going to be good and bad times. This is a bad time, but will be good times. We have to stay in the game. Let's stay in the game together. What can we do?
Let's stay. Hey, Jim, the question I have for you is during the pandemic, my son played this game nonstop. In fact, he asked for his money from his chores to be paid with the online currency of this game. He likes it so much he wants him and me to do an online YouTube channel of this together. Jim, Roblox is at a 52-week low today. Is it worth investing?
All right, here's the problem with Roblox. We have a genuine revulsion of everything that had anything to do with the pandemic. If it was inside, we don't like it. Secondly, if it's not making money, we despise it. So you get a very good company like Roblox, and I hear everything you say. And in another market where the Fed wouldn't be tightening, this stock would be up substantially. But here it is, losing a fortune after being in business for a very long time. It's all the way down to 34. It's got lots of very important buyers, and it's not stopping. The stock is telling you, don't buy me. All right, I want you to be ready to take a little money off the table into any bounce. We should get a bounce by midweek next week. You can put a little money to work on days like today, but only if you have it first. On Mad Tonight, Danaher reported a strong quarter saying no one cares. We had a caller on it, so we're going to go back and talk about the bullish thesis. Then last week, we got the second largest IPO of the year. No one paid any attention to it. What do you make of Accelerate Energy? I'm thinking into an LNG transportation play that's perfect for this moment. And today's tape is the absolute best reminder that you need to stay diversified so we can play MI diversified to be a little bit on the defense here. See if your portfolio passes the test. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.